Ben Rogoff has specialized in the industry for 14 years, spending the early part of his career at CMI and then Aberdeen Fund Managers. These days, though, he manages Polar Capital's Technology Trust and Global Technology Fund, placing him in charge of $1.4 billion in assets. And Apple is the largest holding in the technology fund, but the current position on Apple shares is actually underweight. Ben joins me in the studio now. Why is that?
Well, it's 10% of the fund, so it's difficult to be, overweight a stock that's that large in an index.
Yeah.
But
so just relatively.
Well, for the record, we're also along a number of the key suppliers into Apple, so pretty pleased by last night's numbers.
Okay, and I mean, we all know that they have a tendency to downplay the numbers anyway. So another blowout quarter, great performance. No surprises there. But what stood out for you in these results? Were you at all struck by iPhone sales doing so well, for example, despite the fact that we're expecting an update on the product in September?
To be honest, that's one of the key takeaways. The fact that the consumer just marched on, bought these things in droves, and yet there's a well-understood refresh coming in. Well, we think now almost certainly going to be in the month of September. So amazing action there. I think the standouts were really, from my perspective at least, upside in iPhone units, upside obviously in iPad units. I think a quarter ago people were nervous that there might have been a shortfall based on demand. That's clearly not the case. They did 9 million instead of the 8 million number. And I think the other thing was that we've seen the iPad margin talk to getting towards 39% at the end of the financial year from about 32% last quarter. That was a key risk factor on the stock, that as the business gravitates more towards iPads, that might drag down the corporate average, and that clearly isn't happening.
Okay, and when we speak about iPhone sales, driven somewhat by sales to consumers in emerging markets, particularly China, but Apple is still only scratching the surface of China. Yeah,
I mean, anecdotally, queues around corners that last all day, borne out by a China number that was up 600% year on year, staggering numbers. But let's be clear, they're still growing very fast in more developed markets like the States, where they still grew 60% year on year in their iPhone business. So still very strong global numbers, really, and actually staggering if you think that this is a business that is hundreds of billions now, or at least $100 billion run rate, still growing revenues at 80%. Staggering.
It is, but I'm curious about China because, I mean, this is the frontier for really all companies now. Everyone wants access, those hundreds of millions of customers out there. And the interesting thing about Apple is that it seems to be a little bit behind the curve when you compare it to its competitors, Dell, Motorola, Samsung, list goes on.
Really? I see Apple as an aspirational brand. It's like it is to computing as Starbucks is to coffee. That was a good plug for Starbucks.
But they need to do more. I mean, are you confident in their growth strategy for China?
That's a good question, as in that this is a $600 handset, and therefore there's only a small kind of top of the pyramid, if you like, demographically in emerging markets that can access that handset. Let's be clear, they have an 18% market share of smartphones today based on last night's numbers, but that's a much higher number really if you think about the fact that they only really address the post-paid market, the high-end smartphone market. So one of the things that we were hoping that they might talk about, albeit we weren't expecting it really, was that they might talk about a mid-range smartphone product that would directly, to your question, target that kind of lower income market, and that could materially expand the earnings power of this business going forward.
Okay, so then do you think going forward in a few years' time, we're talking about China being Apple's largest market?
Very much so. Yeah. And absolutely, why not, just by the sheer numbers of people there. But again, it is contingent on being able to, and it is a tricky thing, by the way, taking a product that's a high-end, dominating high-end product, and then trying to find an ancillary product that won't cannibalise your existing business is a very tricky sort of situation. If anyone can do it, Apple can, but it's not without potential pitfalls.
And I'm also curious about more companies using the iPhone and iPad in offices. Did we get much from them about this? Did we get much information? Is this becoming more widespread?
A couple of things on the iPad. Firstly, they sold every unit they could make. It was a big statement to make. The second thing they said was that they're achieving deep penetration in the enterprise with the iPad. The iPad is and has been, I think we've talked about it before, being a Trojan horse in the enterprise, where clearly that the company has almost no market share in Macs in the enterprise, and the iPad and the iPhone now becoming very much Trojan horses. Once an IT department starts to support those devices, it can have an ancillary knock-on effect for the core Mac business.
Okay, and what about the tablet market, though? I mean, is it something to consider that it is becoming more competitive with the likes of Hewlett-Packard, Samsung? They want to get a slice of the action, too. It's going to be tougher going forward.
They do. And but unfortunately, actually, for what it's worth, if I'd sat here 6 months ago, I'd have said that 60 million unit market for 2011, Apple maybe 50, 60, 70% market share. I would say that we're probably slightly on the shy side of that number now, but actually Apple's market share much higher. And so most people forecasting 50% market share for Apple, but it looks to me like they're doing more like 80 to 90%, and the classic challenge is this, that this is a company that buys more parts than anybody, ships more products than anybody, and therefore for a Hewlett-Packard or for a Nokia or whoever, for a RIM, who's rumoured to be abandoning their Wi-Fi playbook already, it's very difficult to get back in the game when you're paying more for the components, having to deliver a product at a lower price point. Pretty tricky.
Okay, now talk to me a little bit about risk going forward then, because you know, it's been a great performance and everything else, and it's what we expect. But just tell me a little bit about the risks, any concerns you have as an investor. You know, one thing that strikes me, we've heard about, you know, iPads and iPhones perhaps cannibalizing the Mac side of the business. You know, what do you think about that?
Yeah, great question. Always risks? Well, I've got to say that, right? You invite me on. No, it is a great question. One of the things that we used to worry about, in fact, 2 years ago, I used to worry about the iPod business, and now it gets a one-liner because it's absolutely irrelevant in the scheme of things. The Mac business, for what it's worth, and I see that now as optionality, 4 million units in a quarter, growing 14% year on year. People say that's one of the negatives associated with the quarter last night, but the reality is that the PC market, you know, ex the enterprise, is barely growing at all. So it's, I think, a staggering performance in the Mac business to be 14% up in units, and that's ahead of a product refresh and the new operating system, the Lion operating system. So yes, at the margin there is risk associated with that business, but at the end of the day, the company has 8 to 10% market share of global PCs. So they can still grow that whilst inflicting a ton of damage on those PC vendors. Bigger risk going forward. I've said it before, this company is a pseudo-private company with a listing. I'm very happy about that. It's run beautifully, and after last night's numbers, you know, it's pretty plain to see. But be clear, you know, they have maybe a longer investment time frame than a bit like a Google, really, that at times may disappoint. And the other thing to bear in mind is it is a hit-driven business, and so to an extent they don't have much recurring revenues. This is a business that continually has to reinvent itself, and I think that investors will be reticent to pay a big multiple for that earnings stream going forward. I
mean, they're still generating an enormous amount of cash, aren't they, sitting on their balance sheets? What do you want to see them do with that money?
76 billion, and they just did 10 billion more in the last 90 days. Staggering. And just, you know, put it into context.
Dividends?
You know, well, unlikely. And as a growth investor, I'm kind of not that comfortable with the idea of getting one. For what it's worth, it implies that they don't see very much to do with the cash. That being said, what do they do with, you know, $76 billion of cash? Well, it does give you a sense of just how difficult the problem for a Nokia is, or for a Research in Motion, where Apple's cash balance, you know, they've just generated half of Nokia's market cap in the last 90 days. Just gives you a sense of how difficult it is to get out of the morass.
That sure does put it into perspective. Ben Rogoff, always great to have you on the show. Thank you so much for coming in.